Hello and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analyzing the NASDAQ100. As you just saw with the intro of this video, our YouTube channel has just hit 16,000 subscribers. So just before I start today's video, I just want to say a massive thank you to every single one of you who's been supporting this channel over the past year and a half. Thank you very much. I appreciate your support every step of the way. And to celebrate this huge milestone, we are offering a 25% discount over our streaming service and Signal Group. So of course, once you sign up to our streaming service at dailymarketmovements.com, I've left the website link in the description of today's video. You then gain access to our private Telegram Signal Group. And if you use the coupon code, so if you come onto our streaming service, fill in your account details, it will take you through to the payment page. If you put 16,000 as the coupon code, you will get a 25% discount, which takes off $100, making it only $299 to join our Signal team for 1 year. So one payment for the whole year. But let's get back to the markets. It is a very ugly trading session here in Wall Street today. We have the Dow Jones 30 currently down 2.27%. S&P 500 is now down 2.77%, and we have the NASDAQ, which is down 3.25%, but that doesn't tell you the true picture. At one point today, the NASDAQ 100 was down nearly 5%, down 4.93% at the lows. A horrible day here in Wall Street. Pretty much 99% of stocks at this moment in time are selling off, and it's been a very, very difficult start to the year. But to surprise many of you, today I have gone shopping. Today in the markets are days what I like to call shopping days. And the reason being is because the markets right now are offering fantastic discounts. I mentioned over in my Signal chat group this morning that, sometimes when you go to a shopping mall or a shopping center and you see some of your favorite brands, whether that be Ralph Lauren, Adidas, Nike, you name it, whatever your favorite clothing brands are, and in the window there's that massive sign that says sale and it tries to bring people in. Well, that's what the US stock market is offering today. It's offering a massive sale. Okay, we have some of the top quality stocks here in Wall Street, the likes of Apple, Microsoft, Google, Facebook, Amazon, you name it, the FANG names, they are all selling at a huge discount at this moment in time. In fact, many of the stocks are down 30, 40, if not 50%. And I'm talking about top quality names that will probably surge going into the latter end of 2022. So this is a fantastic buying opportunity. I'm aware that many retail traders right now have probably suffered over the past couple of weeks. I have. My portfolio is down significantly. But I also have been sitting in cash, about 30% cash. And now it's time to put that money to work, and I've been buying some top quality names. I did post a video on YouTube earlier on this morning where I discussed my positions in NVIDIA, AMD and Microsoft that I've just opened today. But the NASDAQ 100, if you're trading the indices only, I'm sure many of you are only trading the indices, this is a fantastic opportunity to buy. And I know that I said this yesterday before we've had this massive 5% correction, but as I mentioned, you want to be buying little and little, averaging down here. And if you were someone who bought at the open today and you've seen the NASDAQ 100 fall a further 3 or 2%, okay, it's not the best start, but at the same time, it's now offering you even more value. So this is an area where you want to be buying. Due to the fact, guys, look at the RSI. We're all the way down at 22. In fact, last time we were this oversold on the RSI, it takes us all the way back to January 2019. So over 2 years ago. And this is a perfect buying opportunity. It was just during yesterday's video where I think I showed you, if I just find that chart that I had up, it was this chart here where I showed you that if you were to miss the 10 best trading days per decade, your return since early 1930s would have only been 28% until now. And typically speaking, the best trading days come after the worst trading days in the US stock market. So it's incredibly important to remain invested, even during very difficult times like this. Of course, you want to have a very good risk management. If your trading accounts are blowing, even if you've got high leverage, you're probably risking too much per trade. Maximum per trade on your stop losses, you want to be losing 1 to 2% of your overall account balance. I know that many of you risk in excess of 50% of your account per trade. And of course, with moves like this, especially with leveraged accounts, it is going to blow your accounts. So please, 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 if you have blown your account so far this month, then please take this as a lesson. You're not just losing money. I want you to learn from this experience of you losing money. There's no point just losing money, okay? Learn from it. Times like this will definitely reoccur, and you'll be much more better prepared as we go into very volatile times like this. But of course, going into this week, it's going to be a huge week, which will dictate where the NASDAQ 100 trades in the in the near-term future, and that's due to the fact we have Fed minutes starting tomorrow, and of course on Wednesday we have that conference where Jerome Powell will likely speak, and we have the interest rate decision. I personally believe that the market has priced in now about 5 rate hikes. And I don't think that we're going to get it. I think Jerome Powell's going to come out and strike a massive dovish tone to the market, and we will see the stock markets rebound. I think I'm a big believer in timings, and I think that at this moment in time, with the indices as low as they are, below the 200-day EMAs, with the RSIs being as low as they are, telling us that everything is oversold, I think Jerome Powell will come out and strike a very dovish tone, and it will send the stock market flying towards the upside. And again, it's all about today's close. We're down at this moment in time. We're down about 3.68%. That's what it's telling me in front of me. And if we can end today's trading session around maybe minus 1%, maybe even flat, maybe even in positive territory, anything is possible. It's a big ask, but if we can end today in positive territory, that would be a massive buying signal for myself. That would tell me to be buying these tech stocks, because we would form a massive handle candlestick. Now, of course, it's all about the close. It doesn't really matter where we go during today's trading session. It's all about that close. And as I just mentioned, if we can go and finish up up in that positive territory, that would be a huge bullish sign here for the NASDAQ 100 and many other indices. S&P 500 is also looking very ugly. We've pierced below the 200-day EMA. Again, if we can get that close up near that 200-day EMA, that would be a fantastic buying opportunity. But of course, we've still got a few hours to go until the end of this trading session. It's been a very, very ugly start to 2022, and for sure the volatility is not going to end here. It's going to be very volatile as we go into the end of this week, especially with Jerome Powell speaking. I just want to say during today's video to really please be careful when trading for the next couple of weeks, especially if you are retail traders trading on leveraged accounts. But as I mentioned before, buy this dip. You will see so many negative headlines in the news right now. If you turn on CNBC, on Bloomberg, you'll have so many investors coming on saying, don't buy the dip, it's going to go down further. Guess what? This always happens. Every 10% correction that I've seen in the stock market, investors always come out and try and scare the retail traders, try and scare the people like me or you, so that we close our positions. The market then falls lower, and then they come in and buy the dip. Stay invested. As this chart suggests, the best trading days typically come after the worst, and if you were to miss the best trading days, your return since the early 1930s would have only been 28% until now, where if you get the good days, it's going to look a little bit more like the 17,715. That's if you were to have stayed invested through the bad and the good days. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.